Welcome back, friends. It's almost holiday season, and I hope everyone has recovered a bit from the brutal 2 weeks we just went through.
It's definitely tough. We suffered too. But hey, I think this is a good time to emphasize to not all in on everything. Um, for example, my positions have been around 25% compared to my entire account. So while I took a hit, it's not too hard to deal with.
Exactly, I'm the same way too. We know everyone keeps saying the market is too high right now, even though it just keep breaking new heights. But if you want to consistently be profitable, you need to manage a healthy cash ratio.
Yup, I always keep these two phrases in mind. First is 8 out of 10 people lose money in the market. And second is it's not about how much you make, it's about how long you can stay in the game.
I couldn't agree with you more there. We need to make sure we stay in the game while being humble at the same time. So, what's on the menu today?
Okay, today let's briefly talk about an IPO this past Thursday backed by Buffett and some support levels for popular stocks like Tesla.
That's NU, right?
Yup, Nubank is a digital bank started 8 years ago in Brazil. Their goal is to simplify banking with transparency and security, and today it already has nearly 50 million customers by the end of Q3 this year in every city in Brazil.
It uses a low requirement for credit cards, no annual fees, and low interest rate to attract customers. And the customer growth rate is currently 9x compared to 2018 Q3. It is currently the biggest fintech company in Latin America.
It is backed by some big names such as Buffett's Berkshire Hathaway, Sequoia Capital, and Tencent. It has some big backers, and with its high growth rate, it has good potential to be the fintech of Latin America.
Even with all that, we already have a lot of good fintech companies in the US to invest in. I think I need more than just another fintech company that provides low interest and no annual fees for me to buy their stock. Plus, according to CNBC, this year's big IPO have performed poorly, and that also includes SPAC and DPO like Coinbase.
Yep, only Global Foundry did well, which is world's third largest semiconductor manufacturer. Rest of the new IPO stock price have all fallen over 20% from its high into technical bear market. Some stock even dropped over 50%, such as Robinhood.
Oh, Hood. On that note, let's move on to our next segment with some popular stock entries. If you are interested in Robinhood, you can still buy some share around $20 if this level can hold this week. Personally, I'm not interested though.
Agreed, I'm not doing Hood either. Moving on to Tesla, there are a lot of YouTubers covering Tesla, and to be honest, you probably know the stock more than we do, so we'll skip the news, the fundamentals, and everything in between and go straight into the support levels.
1000 is a critical level for Tesla, and this week we closed at 1017. For Tesla, there's a weak support between 830 and 900. And below that, we see 790 to 810. After that, below 790, we are looking at somewhere between 600 to 760.
Personally, I'm looking to buy shares in the 700s and hold for a few quarters, just like the end of last year. I'm not sure when I'll be able to get those shares since Tesla is pretty popular, but I'm in no rush at all.
I agree. And I would love to add Tesla at those pricing level. My main focus for this market right now are still EV, metaverse, and clean energy sectors, trying to consolidate my position in those areas into the next decade or so.
Alright, let's also take a look at Lululemon. Earnings this Thursday. Check out the screen for their report card. This quarter, they opened 18 direct stores and has 552 stores globally. They raised their full year guidance as well from between 6.19 and 6.26 billion to 6.25 and 6.29 billion.
So ER looks good. Why did it drop after earnings?
Right now, the market thinks that at current PE valuation over 60 is based on recent stock performances. But based on normal situations and normal growth rate, Lulu's PE should be below 50.
Which means if PE were to drop to below 50, we are looking at about $330, which is about a 10% drop. Wow, that's a big difference. If I believe Lulu can maintain the recent high growth rate, what are the support level I should be watching?
The first level we are seeing is 400 to 408. And if that can't hold, we're looking at 360 to 370, so not quite 330 just yet. But I do think that is an attractive zone to open a position.
Yeah, but I would not even look at Lulu at $400 level. What's next?
Let's look at Broadcom. Ticker is AVGO. It also popped Friday on earnings.
So it is also overvalued just like other stocks. It has been going up consistently.
Actually, looking at their earnings, it's not too overvalued, maybe just a tiny bit. Broadcom beat on revenue and EPS, and revenue guidance for next quarter also beats estimate.
Friday it closed at 630, which is basically the valuation for next quarter. Semiconductor is a good sector to hold, and it's been outperforming other industry lately. So if there's a pullback on AVGO, I will consider it. But right now, we can only provide the first critical level between 550 and 570. If it doesn't dip below that, we will let everyone know what the plan is.
We got a nice rebound this week after 2 weeks of losses mainly from the Omicron variant, which appears to be less severe than we originally expected. Shocker, right?
Yeah, and also Powell suddenly became all hawkish and stuff.
On Thursday, we have weekly jobless claims fell to 184,000, which is the lowest level in more than 52 years. I'm honestly not sure how accurate this number is, but let's just roll with it. Jobless claims were at around 800K at the beginning of the year, and we're doing a pretty good job keeping this number down.
And on Friday, the inflation number came in hot, around 6.8%, the highest level since 1982.
This number is telling the Fed they need to do something ASAP. The labor market is doing pretty good for now, with the unemployment rate down at 4.2%, well below the pandemic peak of 14.8. So I think Fed should shift their focus to battle inflationary pressures over improvements in the labor market.
So, what do you expect the Fed to announce in the next week's meeting?
Well, let's see. It's time for new economic projections, which will likely have updated growth, inflation, and unemployment forecasts, and some other important indicators for the upcoming years.
Do you think they will mention the new accelerated tapering plan at the next week's meeting?
I'm pretty sure they will. Likely, we're expecting the pace of tapering to double from 15 billion per month to maybe 30 billion per month.
Maybe we will get a new dot plot showing the best guess on how many rate hikes we could possibly get next year.
Oh, yeah, probably. I'm sure they will talk about the Omicron variant and the current inflation. Let's see what picture they try to paint. Maybe Powell will give out some more dovish commentary and rip up the market again.
I wouldn't be surprised at all, to be honest. In the past 2 weeks, a lot of high valuation segments have been sold off, and some big money is moving toward defensive assets and bonds.
Yup, volatility is not going anywhere for the next few months. But like we mentioned earlier with Tesla, if we can see a good level, no need to hold back, guys. In this crazy inflation environment, equities like stock market tend to perform in line or better than rates of inflation.
I would probably stay away from meme stocks and small cap for now. Focus more on large cap technology. They held up pretty well in the recent pullback.
Just look at Apple. I don't know what to say.
Yep, it went up 10% this week alone, pretty much carrying the S&P 500 and the Nasdaq.
During the recent sell-off, we saw investors become more defensive and move their cash into sectors like utilities and consumer staples, and continue selling high valuation sectors.
Tell me about defensive stocks. Just look at UNH and how crazy it was. If you are interested in healthcare sector as your defensive position in your portfolio, check out our video back in August that we talked about healthcare.
Okay, so 10 minutes.